do we see, is that when it jumps to 5,000 or 10,000, or we have $200 silver? Is it going to be a binary outcome like that?
Well, I mean, again, we don't have a crystal ball, but yeah, there might come a point where that exact scenario could happen, and also depending on the circumstances of when it happens, and suddenly there's this enormous demand for gold and silver, then you could see these quantum leaps and jumps in price extremely quickly.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and today's video is with London Paul of the Sirius Report, where I asked him that given how many times each piece of gold and silver has been sold where it's set up for the end of It's a Wonderful Life, if he sees a slow rise in the price, or at some point whether we're really going to see things get kind of wild and some big numbers. So with that said, here you go. I mean, I've been of the school of thought that at some point, whether that's tomorrow or maybe it's some amount of years, it's longer than I would think possible. But if we're headed towards the point where eventually someone says, all right, I want my physical, and then it's simply not there to be delivered, are we headed to that type of scenario? And if so, does that mean that rather than having, gold hits 1,800, 1,900, a year or two later, it's at 2,200? I would think in that type of situation, do we see, is that when it jumps to 5,000 or 10,000, or we have $200 silver? Is it going to be a binary outcome like that?
Well, I mean, again, we don't have a crystal ball, but yeah, there might come a point where that exact scenario could happen, and also depending on the circumstances of when it happens, and suddenly there's this enormous demand for gold and silver, then you could see these quantum leaps and jumps in price extremely quickly, and I wouldn't rule them out. I can't say definitively, but if I'm trying to be honest with myself, I can conceive of that happening. I mean, I tend to try not get too exuberant about gold and silver and over egg things, because unfortunately that we're trying to encourage people to take an interest in this and not put them off with sensationalism. I mean, yeah, I could say it could jump to 10,000 overnight, and maybe it will, but I can't say definitively. But I think there will come a point where the demand will be so enormous and the supply will be non-existent, and therefore the price is going to move accordingly. And yeah, look at palladium on a smaller scale and what can happen. And we know the reality of what the markets truly are and what the economy really is. But to all intents and purposes, everything seems quite benign to the wider world. Well, imagine a scenario where it's gold and silver and the world is in chaos, and therefore look at what's happening in palladium in a notional normalized world, for want of a better word, and then extrapolate that to what it could happen to the gold and silver market. So yes, there is a precedent where you could see, to coin your phrase, a Tesla moment in gold and silver, and we can't dismiss that. And certainly the argument is at some point there's going to be an enormous dislocation between the illusion we're seeing now and reality rearing its head, and no one's going to be able to hide the illusion anymore. And when reality does, then all bets are off as to what the outcome will be. But I don't sort of work on the basis of trying to forecast such events. Ultimately, my opinion is gold and silver are not investments. They're just to preserve your wealth. I mean, yeah, okay, we fully expect a significant rise in the price, but if we end up with hyperinflation, what does that even mean anymore? And that's, we can't quantify that, but it's a preservation of wealth. Whereas if you have your wealth tied up in paper assets, then they're going to be eviscerated, and I don't have any doubts about that. So that's my metric. But yes, the precedent for a massive rise in a price, we can't dismiss it, because in essence, when we've seen a short supply of physical in the palladium markets, that's look at the spike in the price that we've seen. So that's another indication, and I think of what we will eventually see in gold and silver. And as you say, when we extrapolate a serious economic event, then we can't really quantify what that might actually mean. But palladium gives us some indication of what we can expect.
Yeah, that makes sense. Along those lines, you mentioned China quite a bit here. And people often wonder, all right, well, if China has all this gold and they're getting tired of the US pushing them around, why not just go to the gold standard? I've been wondering, are they basically, it's kind of like if you're at a poker table where there's the easy money, shall we say. Are they basically just sitting there say, all right, well, we'll keep taking as much physical as possible at the lower price, and then when there's no more to be taken, that's when maybe they have a move like that? And one question along with that, there was a big reported, whether metal actually goes into these ETFs or not, I understand is an open question, but someone reportedly bought a big chunk of silver that went into the SLV. So I was curious if that could have been China, or what you think they may be doing on some of these.
Yeah, well, China certainly has been buying silver. Whether it relates to that, the SLV, I don't know. And as you rightly point out, there's some question as to whether that's, physical or not. In a broader context, a lot of people say, why didn't China just get on pulling the plug? But China has 10-year, 50-year, 100-year plans, and they stick to them. And as much as acquiring as much physical metal as they can, the other aspect to this is China's trying to dump as many dollars as it can and offload as many treasuries as possible and buy up as many assets as they possibly can in the process. So it's a multifaceted approach. And if anyone thinks China's got $1 trillion worth of treasuries, they haven't. Have they got $600 billion? I doubt it. Have they got 500? I doubt it. I think they've dumped way more than perhaps the conventional wisdom would suggest. And yeah, you can look at the tick report. Well, do we seriously believe, what is it, 300 billion roughly in the Cayman Islands? No, there's all sorts of strange scenarios that come out, and I don't, I regard the tick report about as much as I regard any other data. I think it's massaging reality, and I know for a fact China has dumped huge amounts of treasuries, and this is partly why there's been this acceleration of anger and resentment and trying to convince the world that China's the bogeyman, because China's been doing all these things. It hasn't just been building out the Belt and Road from east to west. It's been buying enormous amounts of gold, and it's been dumping huge amounts of treasuries and de-dollarizing. So this is why there's all the, China suddenly is now the existential threat to the world, apparently, according to the US, if you believe it, which of course is nonsense. But so it's a multifaceted approach for China, and they're not going to just push the button suddenly. I mean, there's certainly an argument that says at some point they most certainly will do, but now really isn't necessarily this precise moment to do it. I mean, some people, and I did, I put out on my own, and I don't speculate on my podcast, but I did put one bit of speculation that said, look, the present situation in China might be an ideal time for them to effectively do the reset, for want of, even though the reset's a big, long, event-driven process, but push the button, and because they've got quarantine, they've shut down all their supply chains, et cetera, et cetera. And, I just speculated and threw it out there, not because I believed it would be the case, but, and I don't see any evidence to suggest they'll do that now, but at some point, yes, but they don't work the way the West thinks, and they will do things in their own measured time and way, and they're not panicking about the fact that their economy is suffering because of the current coronavirus. They're taking stock, and actually they've been rotating their economy and doing different things for quite some time. We've talked about the fact it's becoming more consumer based, but they still have an export base, and they've bought up supply lines across the world, so they benefit as well from that. So China's actually using this as an opportunity to do some more adjustments to their own economy, which they may have done 6 months or a year from now anyway. So it's kind of accelerated some processes, made them reassess certain things. And again, we can't fall into the trap of thinking how we would in the West, that, you know, let's go and head into the room, shoot everyone dead, and then ask questions later. That's not kind of how China operates. They're very methodical. They will think things through and make assessments. And again, this is part of this is sort of Western illusion as to what goes on in China and how Beijing operates as a government, and they don't operate how people think. So, I mean, don't get me wrong, there might be a scenario where they feel compelled to do something, but by and large, everything's event driven. So when one serious, set of objectives is achieved, they move on to the next one. But they have very definitive plans, and if you look at their 5-year plan, they follow it to the letter of the law, and they're very meticulous, and they work through each thing, and they complete it on time, in budget. Then they move on to the next set of objectives. And if people want to understand what they're doing, I mean, okay, it's in Chinese, so but it's all public domain information. People can find out what China's doing. They don't hide what they're intending to do. I mean, certain things, yes, the whole asset-backed crypto stuff they kept on, or digital coin, they kept under wraps for quite a long time. But they're fairly transparent about most things they're doing. But they have a measured approach. So, and if, as I say, there'll come a point where maybe, they'll go, well, in the opaque markets, we can't buy any more gold, really. We're running on fumes. Okay, well, that angle's gone. Okay, so maybe now we have to accept the price will have to move accordingly. Because the other thing is, China's got a maturing Shanghai Gold Exchange, and in the new world where there's going to be a lot of demand and supply, they can benefit from that as well in terms of trading, because there's going to be suddenly an enormous demand where the opaque market, someone's going to go, I want 100 tons, and someone's going to go, well, you can't get it at 2,000, you can't get it at 5,000, or whatever it might be. I mean, I can't say specifically, but if you want a ton of gold in the opaque markets, you're not going to pay $2,500 an ounce equivalent now, just to put it in context.
Yeah, that makes a lot of sense, and sure will be fascinating to see how that unfolds. Hopefully you enjoyed that clip. Certainly some interesting comments Paul had, and if you did find that helpful, then stay tuned, because the video that's about to appear for you, he gets into what he's seeing with these repo lines, which were sold as temporary, have turned out to be anything but, and I think you'll like what he had to say.